Hi, Jonathan York by Financial Partners, looking at investment markets. The market's really still grappling with this sort of higher inflation and potentially higher rates going forward. But although inflation is still stubbornly high and well above the sort of 2 to 3% that the Fed would like to see, you got to remember back in June last year it was 9.1. Currently it's around 6.4, so it's come down quite a bit, but still looking for it to come down further. But also as well, the recent rate hikes from the Fed, haven't really filtered through to the economy yet, and it's just going to be interesting to see how that plays through in the next sort of 3 to 6 months. Because certainly inflation is still predicted to be falling over the next sort of 3 to 6 months. What is quite interesting, that 10-year rate, that's come back now from the sort of 3.5 level it was trading, currently around sort of 3.95. Now, still faced with some pretty major sort of labour shortages out there, which is not helping the inflationary pressures. But so far, earnings have been pretty good. On the whole, it's probably around 70-75% have beaten their estimates. And this week celebrated the 1 year anniversary as well of the start of the war in Ukraine. That special military operation that Russia was sort of launching that was supposed to last sort of 1 to 2 weeks. "12 months later, there's still no sort of sight for the end of that conflict. But also, Putin's really backed himself into a corner. He's sort of coming out and blaming the West for the military action now. Which is quite ironic, really, because he was the one who launched the invasion of Ukraine with Russian tanks rolling over the border. And it's just really hard to see how he comes out of this with any credibility. Oil's backed off from $80, currently around $74 and change on WTI. Now again, in the UK, some sort of encouraging signs that inflation appears to have peaked from that sort of 11.1 print, and that's currently trading just above 10%. So obviously still very high numbers, but the fact that it's starting to fall is showing some encouraging signs. But also as well, the retail sales number, which was expected to be a negative number, that actually came out as positive. Came out at plus 0.5 for January, which was a real surprise. But still, the biggest issue in the UK, again, and sort of globally, is this labour shortage, and really now it's starting to hit home the sort of fallacy of the Brexit vote. What's really quite interesting as well is all the politicians who voted for it are no longer there to pick up the mess. They've all left. In the UK as well, some of the supermarkets have issued a sort of a rationing process on sort of fruit and vegetables because really getting very scarce on resources and supply out there. European equities, really been underperformers over the last sort of 2 to 3 years, and certainly there appears to be a little bit of value out there, and trading reasonably sort of positively. And again, encouraging signs coming out of the EU region. Now in Australia, the Reserve Bank, that has really been pretty sort of conservative on its rate hikes. Potentially is getting a little bit more hawkish now, but again, they're still well behind the other central banks. And obviously China reopening now and sort of getting rid of that zero COVID policy really had a major boost for the Australian economy in terms of minerals and resources. But New South Wales and parts of Sydney were hit by another pretty big storm. So again, they've got a big cleanup process there, and that's just going to be sort of timely and costly as well. Now here in New Zealand, the full extent of Cyclone Gabrielle is starting to sort of hit home really. Certainly Gisborne and the Hawke's Bay regions really have been devastated. And it's really a huge cleanup operation, and then you start to sort of sit down and analyse, how you sort of try and rebuild and sort of fix some of the major roading issues. Which some of them could take sort of 12 to 18 months, because there is no quick fix. Now the Reserve Bank did increase rates by 50 basis points again, taking the OCR now to 4.75. Now that's the 10th consecutive rate increase and taking rates to the highest level since 2008. But if you're looking at a peak of sort of 525 to 550, at 475, there's not really much sort of further to go. So here in New Zealand, really looking for a bumper sort of next couple of months in terms of sort of tourists coming and spending money, just to see how the economy will perform. And all the time, obviously, that clock is ticking towards that general election in October, with just over 7 months to go now before the election. So far, earnings have been a little bit mixed here in New Zealand. Some reasonable sort of profits coming forward. Guidance is still, challenging, is the most sort of common word used over the next sort of 6 months. But that's really a global theme as well. Most of the earnings reports that are coming through globally are still pointing toward challenging conditions over the next sort of 6 months. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.